Hello friends, this is Jennifer Roy with AMCAP. Today we're talking mortgage basics. A mortgage loan is a lot like a puzzle. There are many parts and pieces that need to come together to ensure that the loan package is complete and you can close on time. This takes a village. The obvious players in this are the buyers, the sellers, the realtors, and if you require a loan, the loan originator. As you move throughout the process, you may feel like there's more people coming out of the woodwork, asking you questions, wanting additional documentation or contact information, starting to wonder what's going on, who are you, what do you want? So behind the scenes, we have setup assistants, we have loan processors. As the team grows, underwriters will get involved and they will ultimately approve the loan. We will have the title company, and sometimes they'll have attorneys involved, appraisers. They'll have inspectors, and sometimes that can include pest control inspection, termite inspection, and if required, surveyors. So we all work together to ensure this is a smooth, efficient process and we get your closing done on time. So that first step is pre-qualification. Why is it important? I have a video about pre-qualification, but the main reason it's important is you want to feel comfortable with your offer and you want the seller to feel comfortable with your offer. And how we do that is we take that initial look of your income, assets, liability. We'll have discussions on what loan products are maybe appealing to you. What are your financial goals? Back to that puzzle analogy, we're trying to figure out where you feel comfortable with. Is there a loan payment that you don't want to go over? Take all this into consideration and just hone in on a particular price point that you as a borrower feel comfortable with. And then as a lending company, they can say, okay, yes, this borrower can make an offer on an X value home. So when you go put in your offer and you have this pre-qualification letter, it is a strong letter stating we've done some of this preliminary legwork, we all feel comfortable with this value. Also through this pre-qualification, it will save you time in the long run. I mentioned these folks will come out of the woodwork asking questions, but if we do some of this early on, it won't be as painful, and we can get some of those questions out a little bit earlier or start chasing down some more of that paperwork. So one of the questions some people have is, I hear pre-qualification and then I hear pre-approval. What's the difference? Are they the same thing? They sound pretty similar, but they're actually two different things. The pre-qualification is what we're talking about right now. That's to get you out shopping for a home. Once you have a contract on a home and you're moving into the bulk of the loan process, we're trying to get to pre-approval. I mentioned the underwriters ultimately approve your loan. And pre-approval is what we're trying to get to. We're trying to get that clear to close. So you can get into the title company location, sign all your paperwork, and move into your home. So that pre-approval stage may be a little bit of a deeper dive. And that's where those questions may come up as far as there's an issue on the credit report we just need to dig a little deeper on. If you've changed jobs in the past couple of years, you may have to get some further verifications of employment. Assets side, if you're utilizing a gift, this is just an example, we may need that individual to provide a letter stating this is the gift amount, it does not have to be repaid, and this is where those funds are stored. So if you have any questions on the pre-approval side, we can walk through that in more detail, but in general, that is the difference between pre-qualification and pre-approval. And of course, through this pre-qualification phase, if you're interested, please reach out to me. I can help you walk through that process and make sure that you have a strong letter to make an offer on a house. Mention the pre-qualification, loan processors are getting involved, the underwriters getting involved, getting to closer and closer to that clear to close or pre-approval, and we get a closing disclosure form. And that's when I will call the borrower, walk through all the numbers, pluses and minuses, what the borrower is expected to pay, what the seller might be providing, and get to the bottom line, what is expected from the borrower at closing to provide as funds. We'll walk through all that so there are no surprises and get to closing. You sign all the documents, get your keys, and go into your new home. So what are the different loan programs? In general, we have conventional, we have government loans, there's jumbo loans, so there's a certain dollar value that if your loan value goes over that, you are in jumbo loan territory. So you may hear a few different loan terms like fixed rate, adjustable rate, or a combination loan. So fixed rate is pretty straightforward. You have one interest rate through the life of the loan. The life of the loan can be anywhere 10, 15, 20, 25, 30 years. Adjustable rate mortgages or ARMs is another type of loan. You may see it defined, I'm going to give examples like 3-1. That 3 represents the first 3 years of your mortgage is like an introductory interest rate. And that 1 means that every year that interest rate will change with the market. And there are different types of ARMs. And if you're trying to debate between a fixed rate and an ARM, I can help you out. We can talk about the pluses and minuses, bounce that against your financial goals, and see what works best for you. There's also something called combination loan. If you hear 80-10-10, 80-15-5, this is representing different pieces of the whole value of that home. So that 80 is your first loan, the main loan on your home. That 80% value is your loan. And then in 10-10, that second 10 is you're getting a second loan on the home, and that other 10 is your down payment. Same with 80-15-5. 80 is your main loan, 15 is your second loan, 5 is the 5% down you're putting. And some folks will do this to avoid mortgage insurance. Again, you have to do a plus minus on what makes sense, what the rates are for an 80-10-10 or 80-15-5, for example, versus just getting one loan at 95%. So all these different loan types and products is things we can talk about during that pre-qualification stage and get ahead of it so we know what we're keeping an eye out for. All right, so just a few differences between conventional, FHA, VA for our eligible veterans. Conventional loan, the minimum down payment is 3%. FHA is 3.5%, VA, none. So I'll make some other videos if there's some interest, differences on conventional loans, go further into what an FHA loan is, go further into a VA loan. So look out for those in the future. For right now, in general, gifts are allowed on these types of loans. Seller concessions are allowed on these types of loans. But small differences in loan limits until we get into the jumbo side of things. And there's also some credit score minimums. FHA is the most forgiving on credit scores. So there's a lot of things to balance. Like I mentioned, that puzzle analogy to figure out what type of loan product makes sense for you. And it could be a conventional, it could be an FHA. So we'll go through that, and ultimately between that pre-qualification and that pre-approval, those two terms we were talking about earlier, there are things you should do and should not do to help protect your credit and your loan offer through this 30-day window usually. So please check out my video on do's and don'ts after pre-qualification, because there's some things you should avoid doing and some things you should continue doing. And if you have questions about any of that, please reach out to me and I can help. I also have videos about the standard information you need for a loan application. I talk about income, assets, your liabilities. So please check those out. If you have any questions, please reach out. I'm here to help. I don't want you to run into any problems. So in general, like I mentioned at the beginning, it takes a village. We're all working really hard together to make sure you have a smooth process, you close on time. Here to walk through every step along the way. If you have any questions, I'll make sure you understand the loan products. We trust our partners. We really want to make sure our clients feel like they had a nice process going through this with us and would recommend us going forward. The number one goal is to get our buyers approved and at a level they'll feel comfortable at, get closed on time, funded on time, and moved into their new home. So if you have questions about basic mortgage or if something more particular, please reach out and contact me. We can talk about it and get that pre-qualification going. And besides that, thanks and have a great day.